Hi, Clayton. This is Michelle Macer, and I'm selling one of my rental properties. How can I go about saving on capital gains without using the 1031 exchange? All the improvements in the home since the beginning, for instance, new kitchen, new sidewalk, new steps. Can I use that on my taxes coming up? Thank you.
Okay, so there's a lot there, Michelle. Great question. I just want to curious why you wouldn't want to use a 1031 exchange. I mean, have you looked at the numbers and think that okay, it's not beneficial? Again, a 1031 exchange is a powerful tax vehicle for you to be able to trade up in value. You're going to be trading into a like in kind property, but taking that profit and rolling it in to other rental properties. So I just would first float that question: why specifically wouldn't you want to use the 1031 exchange? And again, you should talk to a CPA about that. I'm not a financial advisor and I'm not a certified public accountant, but talk to your CPA that understands 1031 exchanges. And it comes down to the numbers because it doesn't always make sense. We've had properties we've sold that it did not make sense to use a 1031 exchange. So I can understand that. A couple of other questions I would have on this property. Remember, if you're making repairs to a property, you need to differentiate these things on your taxes. Repairs are different than improvements on your taxes. So if you've made repairs on a house, those are not capital improvements. Those are not really going to affect your overall bottom line from a tax perspective. On repairs, you can of course write those off in the calendar year in which you've made them. And so if you're making these, the repairs are just part of broader maintenance, right? Those are going to be just basic expenses. But improvements to a property, that's going to be different, and those are going to be classified differently on your taxes. So there's a couple of things I would definitely just talk with a CPA on accelerating that depreciation, because if you've made overall improvements to the property, sidewalk, roof, etc., it may be an opportunity if you have other rental properties to think about doing a cost segregation analysis with your CPA. Again, we have whole videos here on the channel about cost seg and cost segregation analysis. You'll need a cost segregation engineer who will look at the property or properties and see the number of improvements that you've made on the property: new roof, new cabinets, again, new sidewalk, new improvements to the land, new improvements to the overall structure of the property. Those can be accelerated in depreciation in certain calendar years, and you can choose on when to use those. So again, I don't know the full extent of your balance sheet on this property. I'd have to really dive into the numbers and kind of pick this apart with a fine-tooth comb. Yes, there are other options. And again, also, I may ask you the question, did you live in the property at any point? Was it a primary residence at any point? Those are all questions, because remember, a primary residence, if you're living in it for longer than 2 years, then that capital gains that you're going to pay on that property is wiped away. So that's why a lot of flippers will live in a property, improve on the property while they're living in it for a year to 2 years. And then after that 2 years, they sell it. Those profits are theirs instead of the federal government's. But again, I would seriously consider looking at a 1031 exchange if it makes sense from an overall profit perspective, and rolling that into additional properties, because the tax benefits of a 1031 exchange typically are going to far outweigh any of these other sort of smaller manipulative things that you may be doing. And again, I also don't know how long you've owned the property. Again, these are all things to think about in this process. Length of ownership. Have you lived in it as a primary residence at any point? What types of improvements? Are they repairs, or are they general improvements to the property, actual structural improvements to the property, which are classified differently on your taxes? And certain things, of course, you can write off in a particular calendar year, and others you can decide to write it off at certain, anytime you want, really. You can carry that forward if you'd like. So certain things need to be written off in this calendar year. Again, speak with your CPA on this. They will guide you in the proper way, letting them know the difference between those improvements and repairs. Also, I should ask you, if you are a real estate professional, again, a real estate professional, you are in a different tax category as well, and therefore a cost segregation analysis benefits you as a real estate professional in a different way than if you are a passive investor who works a W-2 job. You're in a different tax classification. So again, all questions for your CPA. Unfortunately, Michelle, I just don't have all of the answers because I don't have your exact property in front of me with these details. But again, please give all of these details to your CPA and get proper counsel on that. But great question, and those are the types of things. There's no dumb questions. These are very detailed, technical questions, and that's why people go to school for a number of years to become a CPA, to become a lawyer, et cetera. These are questions that need answering from those individuals. Just go to morrisinvest.com. Check out all of the great resources we have there. But if you click on the book a call button, we'll jump on the phone with you for 30 minutes. A little calendar will pop up. You pick the time that you'd like to jump on. Make sure you put in the right phone number and email address. So we'll call you at that time. And we'll look through your whole financial strategy, and help build a custom plan just for you. That's what we do. And while you're on that website, there's a little microphone icon down there. So if you'd like to leave us a voicemail question here, we'd be happy to answer it for you right here on the show. Keep it to about 30 seconds or so. That way we can get more questions answered. All right, my thanks to all of you. Now go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time, everyone.